Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are just 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Gina Martin-Adams, we're in the house. And as we march into that closing bell, we're going to take you beyond it. Beyond the bell with the global simulcast, it is Carol Massar, Tim Stenovec, bringing together, of course, Bloomberg TV, radio, YouTube, as we try to get to grips with what it is, a bond market that is telling us they are fearful of growth, and Carol, a stock market that's trying to claw its way higher again.
Yeah, absolutely, right? Like trying to make sense of this. It's interesting. We just had Abhay Deshpande on over at Centerstone Investors, and he said, you know, what's going to be interesting is he doesn't think the Fed's going to be able to be as aggressive as it wants to be on rates this year. He talks about debt to GDP being higher, the cost of servicing that debt goes up, and he says corporations are also highly indebted, and that will maybe slow down the Fed in its move to raise rates throughout the year, Tim.
Hey, it's remarkable to see the disconnect between the bond market and the equity market as the S&P 500 is so close to closing in the green on this Monday afternoon.
And it was sort of interesting as we heard Art and sort of digesting these comments from Powell, how you're thinking, Gina, about tightening higher than the neutral rate. But I do wonder if our neutral rate is lower than it has been historically, as growth typically has been slowing a little bit more. I can't figure out that number, but certainly the comments that tightening above that rate was perhaps some of the immediate reaction that we saw within these equity markets as well.
Yeah, and I frankly just wonder where that neutral rate is, but I'd go in the other direction. I think we've underestimated the durability of growth. We've underestimated demand throughout this entire recovery. We keep forgetting that the federal government's just dumped cash on corporates as well as households, and that creates a different backdrop for this cycle than we've experienced in the last 10. So maybe that neutral rate is actually quite a bit higher, and we're all getting a little bit too freaked out about what it might do to growth.
Yes, the glass half full, Gina Martin-Adams.
Yes, I can't help myself.
We need optimism on this Monday because, well, we forget about it every now and then. And optimism as we almost near this closing bell. There's much shrieking over at the NYSE and, of course, over the NASDAQ. And we see the S&P 500 basically flat, less than 2 points lower as we continue to settle with less than, 0.04% lower on the S&P 500. However, we did still close lower on the Dow. Of course, Boeing being one of the key movers there, off by 0.6%, 200 points more than to the downside. The NASDAQ off by 55 points, that's 0.4% lower. The big sell-off, of course, happened in the Russell 2000 earlier. All of this wrapped up with Jay Powell sounding that much more hawkish, and it closes just down, but not by a percentage point anymore. We're just less than a percentage point lower on the Russell 2000, Carol.
Yeah, absolutely. We did see it really rough on the small caps bouncing around. We did see that buying into the close. I know, Taylor, we're going to talk about groups. You really see the standout in the energy names. Some really, really strong performance as crude oil shot up for, a third day here. And again, we continue to worry about supplies going forward.
Carol, I'm so glad that you brought that up. I'm just continuing to be astounded by an energy sector that's up more than 30% for the year. And then take a look at this, another 3.7% gain on the day. So those energy stocks certainly following crude higher, of course, as you mentioned, about 110 a barrel on WTI. Otherwise, it also looks pretty risk on, right? It's auto components, it's materials, and then you're getting some technology in there. So for some of the big gainers for our radio audience, you're up anywhere from 0.5% to, yes, about 3.7% if you're in the energy sector. We take a look at some of the losers on the day within the S&P 500, and you go down and it's some software. It is some food and staples. If we're wondering about margins and the impact on inflation, that might be my key takeaway here, as well as the consumer durables as well. Those are some of the worst performers. You're off there about 2%, Carol.
All right, so let's get to some of the gainers in today's session. My gainers really dominated by deal news on this Monday. We saw a fair amount today. I want to go to Berkshire Hathaway. I'm looking at the Class A shares up about 2.2%. Warren Buffett putting money to work, finally getting back to some deal making, which he hasn't been doing in some times. We know the news. Berkshire Hathaway buying Allegheny Corp for $11.6 billion. It's an insurance company, something we know that Berkshire has been very interested in. It's its largest deal since its 2016 acquisition of Precision Castparts, so pretty big. The target, Allegheny, no surprise, up almost 25% in today's session. It was about a 29% premium to its average trading price of the last 30 days. So Allegheny was up. And I just want to mention another deal. The private equity firm Thoma Bravo, I think, Taylor, you talked about this earlier, agreeing to buy the company. We're talking about Anaplan. The deal was $10.7 billion, and Anaplan was up almost 28% in today's session. So a lot of deal flow on on this Monday, too.
Yeah, Merger Monday is like it, right? Let's talk about some of the decliners. A lot of us, I think, woke up to the tragic news about a missing Boeing plane that crashed, a 737 NG, a 737-800. We're watching shares of Boeing today falling 3.6%. The company has its biggest decline in 2 weeks. We should note this is not a 737 MAX. It's the next generation 737, so the predecessor to the 737 MAX, but still investors are a little concerned about that. Disney down 1.2% today. A double dose of bad news. The Shanghai resorts and parks have closed temporarily as the city reports record new COVID-19 infections. 3 parks there closed: Shanghai Disneyland, Disneytown, and Wishing Star Park. We do not know when those will reopen. And then we're also keeping track of what's going on with Nielsen Holdings. Shares falling today 6.9%. This after Nielsen rejected an acquisition proposal from Elliott Investment Management and Brookfield Asset Management. Bloomberg reported that potential deal last week. Shares soared on that deal. The proposal had valued the company at more than $25 per share. Shares now trading at $22.76 a share.
Keeping us focused on some of the losers out there in the equity space, let's have a look at what is losing on the FX space. Let's go cross-asset, because I'm looking at basically the US dollar stronger against most of its trading partners today. This is a Chair Powell, of course, of the Federal Reserve, once again sounding more hawkish, trying to give the signal to the market, and the dollar, it responds. We're currently up 0.25% on the Bloomberg Dollar Index. We see the yen pull back by 0.25%. You see, interestingly, moves the euro. Of course, we'll have Madame Lagarde speaking tomorrow at the BIS. What do we see in terms of different policies being taken by various central bankers? Of course, we had Lale Ancona over at BNY Mellon a little bit earlier saying that Europe's probably going to have to pull back from any sort of normalization as we see the risks of course, Russia, Ukraine, that much more factored in Europe's assets. Let's have a little look at what's happening in terms of Russia, Ukraine, and what it means for the commodity space. Yet again, we're seeing that inflationary pressure that Jay Powell is focused on affecting commodities. Brent crude up 8%. We haven't seen these sorts of moves since, Thursday last week, but still that volatility is there. Brent crude now at 116, WTI at $112 per barrel. We're seeing heating oil on the higher side. You really saw particular limits to the downside in terms of nickel, limits to the upside in terms of wheat. We are seeing such volatility across the assets as we continue to see no real let-up in what is furious intensity of war over in Ukraine. And I'm looking at sovereign bonds, speaking to some of the inflationary pressures. In particular, US, of course, I'm going to go across the world. Canada up 14 basis points. New Zealand, this was a global sell-off, Taylor, but you have the US focus.
It was. And, Caroline, I think it's funny when I try to come here with all these superlatives and you take a look at a 2-year yield climbing 18 basis points on the day, and you would think that that would bring you a superlative. Unfortunately, that's not even some of the biggest moves that we've had this year. On that 2-year yield, 19 basis points doesn't even do it, because we've had bigger moves in February and in March than we have even on this. And that just really shows sort of the volatility that we've really had in the front end of the curve. I'm going to go back and check my math, but I think on the 10-year yield, this is the biggest one-day gain that we've had going back since March of 2020. So I'll continue to make sure that that math checks out. But you are still seeing, Carol, some significant movements here as you've blown through not only a 2%, but a 2.12 here on the 2-year. And we thought 2.25 on the 10-year was a big deal. Blink and you're at a 2.30.
Yeah, I mean, listen, the moves that we've seen in this market, and I was listening to something on surveillance this morning, and it was the question of, have we bottomed out? Have we topped out? This is what we're trying to figure out. What are the real levels that are representative of what's to come in the economy and the outlook here? And I think about this week, we're going to hear from a bunch of Fed speakers. We heard from Jay Powell today, but we're also going to see President Biden going to Europe. You do wonder if that will somehow, Tim, maybe ease what's going on over there in Europe, put an end to that war. There's just so many questions at this point that will really determine the outlook.
Look, it's remarkable that our conversation focus has really been on the global bond sell-off. And, we've talked a lot about what central banks around the world are doing. Meanwhile, we have a war going on, Russia's invasion of Ukraine, that appears to be at some sort of stalemate. But at least today, it's not part of the market narrative.
Well, and I think it may not be part of the market narrative because of what we priced, right? If you think about the S&P 500 down 15% from peak to trough, we effectively priced oil prices staying at $150 for a significant period of time if you run it through a model. So that does suggest that we priced a lot of risk into the equity market already. It has to get worse and materially worse in the commodity complex, in our view, until you see stocks really weaken further.
Meanwhile, is Europe a place to buy? If we look at the global bond sell-off, we saw that actually European stocks Well, we saw relatively resilient today. And actually, even though we have to say that the market moved before, of course, the deterioration of Russia-Ukraine really struck. But Bloomberg had been reporting earlier that European equities are actually higher and basically recouped most of the losses triggered by Russia's invasion of Ukraine. Yes, they're way off their highs that they hit back in early January. But nevertheless, we have started to see maybe markets trying to move past, even though I'm afraid commodity markets certainly haven't. And for me, that's where the inflation focus just returns once again.
And Caroline, you're missing, I think last week we had one of the best rallies that we've had since November 2020. So perhaps maybe not a surprise that equity markets take a breather on days like today as, again, all eyes go towards, well, more flattening of that yield curve, Carol.
Yeah, we'll see if that holds throughout the week. It certainly, at this point, feels like this could be, where we're settling in. But we will still see in terms of the commentary. All right, guys, that's going to do it for this Monday wrap, our cross-platform coverage on radio, TV, and YouTube. We will catch you again on Beyond the Bell, same time, same place tomorrow.